As Bitcoin entered price discovery territory, many anticipated a flood of retail capital into Bitcoin. But has this FOMO actually begun, or are we only just getting started? Today we're going to be looking into whether retail FOMO has begun for Bitcoin, and where better to start than the number of new addresses chart we have here on bitcoinmagazinepro.com. Now, as we can see, over the past few months, the number of active new addresses has actually been declining fairly noticeably. We can see from a peak, not quite all-time high peak, but fairly close to that peak we had in about a year ago, 2023, of 791,000 new addresses on that given day. We actually had a low a few months ago of only 204,883. So a really substantial decrease in the number of new addresses entering the network. But over the past couple of months, we have seen this start increasing again slightly. And especially over the past couple of weeks, we've had a fairly noticeable influx of new users, although still quite beneath our historical trend to the upside and our norm that we've had over the past couple of years. Now, if we go over to Google Trends here, this is a good third-party indication to whether retail are actually interested about Bitcoin. And again, we can see over the past month, this has begun increasing quite noticeably here. But again, still very much lower than even in March of early this year when we set our previous all-time high around $74,000, and substantially lower than the previous cycle highs we had in 2021 and especially 2017. So while this is increasing, it's definitely not at retail FOMO territory that we are used to. And if we just go to charts such as the long and short-term holders, this does again give a little bit of indication that we are seeing a little bit of coin transferring from old, more experienced participants to these new market holders. As we can see on the short-term holder supply, this bottomed at about 613,000, well, 3,613,000 just a month or two ago in September, and has now increased to about 4.2 million. So a fairly noticeable increase there, around 600,000 coins-ish being transferred from long-term holders to short-term holders. But really, again, if you just look at the trend here, this is a pretty insignificant amount of BTC. Even in the run-up we had to our previous all-time high at 74,000, this decreased considerably more before flatlining and increasing again due to the chop consolidation. But now we've only just had a real blip on this. We've got plenty of room to go for coins transitioning to new market participants. And if we see something like the 1 year hodl wave, this really reiterates the fact, because even though we have seen price discovery on BTC, there's only been a couple percent of circulating supply that have been held by people for a year or longer that have actually been taking profit or moving their coins around, which is still higher than the previous peak we had in this metric in the last cycle. So again, after flatlining for months, a slight dip in this, but this is to be expected after we blast past our previous all-time high by tens of thousands. So really, given where we are in the cycle, breaking into price discovery territory, it still seems that we're not getting this big influx, and especially we're not seeing existing Bitcoin holders want to part ways with their coins. And this is really outlined in the supply adjusted coin days destroyed, which has seen a slight uptick in this, but compared to previous peaks, even just like intracycle big moves, this is just a really minimal move to the upside. And looking at previous cycles, this middling ground of about 0.7, 0.8 on this metric is really normal for an early mid stage of a bull cycle. And this is outlined even clearer on the value days destroyed, which is weighting coin days destroyed. So long-term holders adding to coin days destroyed by multiplying by the amount of coins they were holding. I didn't explain that very well, but basically if you were holding a lot of Bitcoin for a long period of time and then moved it, you would add significantly more to this metric than just a new holder with a small amount of BTC. And what we can see is when we get these overheated red territories, such as at the previous all-time high once again, that indicates that the market's very overheated because lots of older, more experienced, large participants are beginning to take profit on their positions. But right now, again, we're at such low territories. This is beneath even early bull cycle territory we saw in 2016, 2017, and considerably lower than anything we saw in 2020, 2021 as the market really started heating up. So there is plenty of room to go. We're not really seeing a huge amount of retail FOMO just yet, so we're not getting into the crazy euphoric territories, and long-term experienced holders still aren't willing to take any substantial profits on their positions, even at prices we've never seen before. Now, I will say, if we look at something like the active address sentiment indicator, the fact that we're not getting a huge amount of new addresses entering and trading and investing in Bitcoin does mean that we potentially have escalated slightly too quickly in terms of price action. Maybe this price couldn't have been sustained forever. Obviously, as soon as you pump $10,000+ in just a couple of days, you might have a little bit of a cool off period after that. So we have seen on the active address sentiment indicator actually bump above this upper deviation band line, which indicates that we might have a slightly more prolonged cool off period as this re-enters, just to allow new market participants to come into the space to add a little bit more fuel for the fire. But one other thing we're seeing is all of this rally that we've seen has been majority spot driven. We've not seen excess leverage, excess derivatives trading. If we just look at the open interest chart here, we can see that we have had a slight uptick in the BTC denominated open interest, but you only have to look back to July to see there was substantially higher open interest at that point in time. And if you look back to just prior to the FTX dump at the bear cycle lows, there was hundreds of thousands more Bitcoin locked in these derivative products, these perpetual futures contracts. So really, even though, again, we're at new all-time highs, we're not seeing people over leveraging themselves and going crazy on the derivative products, which gives us the confidence that this rally is spot driven, much healthier, and probably can be sustained a lot longer, even if there is a slight short-term cool-off period. But one interesting thing is if we look at the addresses with a balance of just 0.01 BTC, what we can see if we just zoom on over the current cycle here, it hasn't really changed that much. If anything, it's actually declined slightly as we've rallied to new all-time highs, which is pretty surprising because usually when we see big exponential rallies in price, like we saw at the ETF announcement, we see the amount of addresses holding just a small amount of Bitcoin begin to absolutely skyrocketing as retail begin FOMOing in. The most clear and obvious example of this is in 2017, where we saw this parabolic increase in new market participants just obtaining a small amount of BTC. Whereas this cycle, we're yet to see that. So maybe people are investing in alternatives such as Coinbase or MicroStrategy or Bitcoin-related stocks, or potentially through ETFs and other products. But one thing we are seeing, which maybe disproves this theory slightly, is the amount of addresses with at least 100 BTC has increased by hundreds over the past few weeks, which is really interesting to see that even as we're approaching and continuing to make new all-time highs, tens of thousands of BTC have been accumulated by some of Bitcoin's biggest holders. I mean, if we just look here, we can see that just a few weeks ago, this was at 16,024 wallets, and now we're above 16,400. So that is 40,000 plus BTC, which at current price is $3.5 billion accumulated by some of Bitcoin's already largest holders. So that tells you really everything you need to know about this current rally. Pre-existing holders are still incredibly bullish, not willing to sell. If anything, are accumulating BTC. New retail FOMO entrants still haven't entered the space in large numbers, which gives us plenty of upside potential for a euphoric rise. And really looking at the derivatives market, everything still looks cool and spot driven. So we're definitely not in overheated territory there. If anything, we couldn't look more bullish considering we've just made considerably new highs in this bull cycle. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your number one source for Bitcoin analysis. So just to summarize, as Bitcoin has rallied to new all-time highs, we've seen a slight influx of new market participants and retail interest looking at the new addresses and Google Trends, but we're yet to see any major accumulation from these new entrants, like we could see from that small BTC wallets holdings chart, seeing that it's flatlined. If anything, has slightly decreased as the larger wallets and larger, more experienced participants are, if anything, looking to accumulate even more. And then looking at charts such as the value days destroyed and the 1 year hodl wave, you can really see that these more experienced and longer participants are still waiting for considerably higher prices. They're not willing to take profit, even though we're at all-time highs and in price discovery territory. And especially considering the derivatives market look far from being overheated, this really indicates that this is a spot-driven rally, not just a temporary move driven by leveraged traders. So there's plenty of gas left in the tank for hopefully considerably higher prices in the not too distant future. If you liked this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on when retail could start flooding back into the Bitcoin markets. Do you think it's already started to happen, or do you think retail FOMO is still a little bit away. As I said, let me know your thoughts down in the comments below and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.